It gives me immense pleasure to announce that the Institute of Chartered Accountants of India has decided to organize its first ever Global Professional Accountants Convention, GLOPAC, on the theme Connecting the Globe, Creating Value, on November 24th to 26th, 2023 at the Mahatma Mandir, Gandhinagar in India. GLOPAC is being celebrated as a mega event to showcase the important role that the accountancy profession has been playing in the economic and social development of our country.
Globalization has made the world one village, and the services of chartered accountant are also available globally without any boundaries. The Institute of Chartered Accountants of India is also devoting significant efforts towards global networking. The convention shall be attended by more than 3,000 delegates from around 40 countries. I would like to extend a warm welcome to the fraternity on behalf of ICI to attend and participate in the first ever GLOPAC.
ICAI is geared up to welcome delegates from across the globe at the GLOPAC.
A very good morning to all of you. On behalf of the Committee on Public and Government Financial Management of ICAI, I welcome all the viewers to the third session of the web learning series on public finance and government accounting, being organized by the committee under the initiative of Azadi Ka Amrit Mahotsav. This topic of discussion is Insight of Public Revenue and Taxation. A well-functioning revenue system is a necessary condition for strong, sustained, and inclusive economic development. Public revenue plays a very important role in operating the finances of a country. Public revenue includes income from taxes and goods and services of public enterprises, revenue from administrative activities such as fees, fines, etc., and gifts and grants. On the other hand, public receipts includes all the income of the government received from formal sources. Speakers for today's webinar, Dr. P. Sivarama Prasad, has written books for different professional institutes like ICAI, ICSI, IIBF, etc., and is having vast knowledge and experience on the subject matter. He has worked in the capacity of Assistant General Manager, State Bank of India, Hyderabad, and as Vice President, SBI General Insurance Company Limited, Hyderabad. He is also a fellow member of Institute of Cost Accountants of India, Kolkata, Indian Institute of Banking and Finance, Mumbai, the Institute of Company Secretaries of India, New Delhi, member of All India Management Association, New Delhi, and Insurance Institute of India, Mumbai. I once again extend a warm welcome to all the viewers to this webinar. Over to you, sir.
Thank you very much, madam.
Yes, sir. Can we start the session now?
So, good morning to all. First of all, thanks to the committee for giving an opportunity to discuss about the public revenue and taxation. This is that important topic, particularly for each and every economy in the world, including India. Because the revenue is the main sources of funds for the development activity of the country. The revenue is generated through taxation only. If the tax structure of the particular country is good, and definitely it will not create any problem to the public, and it is that funds are useful for the development activities of the country. Every country, the main source of funds, they are mobilizing the funds by way of taxation from the public, either direct taxes or indirect taxes. So up to 1 o'clock, I will discuss about the how to design a tax, and it should not be interrupted or inconvenience to the public. At the same time, that the funds are to be utilized by the government properly for productive purpose. And today, most of the countries, they are struggling. It is a big challenge for them also. If at all taxes are increased, then it is an inconvenience to the public. If taxes are reduced, then the government is unable to do the welfare activity of the society, the infrastructure development, whatever it is there, all are through the public revenue. The public revenue is generated through tax only, either direct or indirect tax. I'm Dr. P. Sivaram Prasad, former Assistant General Manager from State Bank of India. Now coming to the subject. To drive a car, steering and accelerator systems are very, very important in a proper manner, in a particular speed, and in order to avoid the accidents and all these things, the steering and accelerator systems are very, very important in the similar manner. To drive the economy, tax system to be designed properly. The economies are to be driven by the governments only. If at all the economy is driven in a proper manner, it is not inconvenience to the public. At the same time, it is for the development of the economy. So the design the tax system is very, 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 very important. Once wrong design is there in designing the tax, then lot of inconvenience to the public. At the same time, it is inconvenience to the government also. High taxation and low taxation, both are not desirable. Suppose if the country is charging more taxes on the public on various, whether it is on direct tax or indirect tax, high taxation is not desirable. People sometimes they are not willing to pay. They are not interested to work also. And lower taxation is also not desirable. Why? Because if the low taxation is there, low revenue to the government, once the low revenue is there, government is unable to provide the development activities. So it should be a break even, neither high nor low. At what point, at what is the optimal point, that is to be designed by the government. It is an art as well as science by taking into account of various factors. Indian economic problems are whatever the characteristics are there. All characteristics are economic problems are to be resolved with the help of a proper tax design system. That's why in any economy, too high or too low is also not desirable. At the same time, high taxation reduces that depends on public rate. If at all the government is charging more the taxes, then they are not they don't require any funds by way of debt. Yes, government is comfortable, but debt is also not required. Once the government is taken debt to supplement the activities to complete the various infrastructure projects, then once public debt is not there, taxes revenue is there, government is happy. But high taxation is a problem to the individuals, a problem to the corporates, because if they are paying more, then automatically their disposable income will reduce. At the same time, economic growth is a problem. Once high taxes are there, the people will consume less. Why? Because the disposable income to the public is less. Once less, then automatically their consumption will less. Once the consumption less, the production of the country will also less. Once the production is less, then automatically it leads to the unemployment problem and a low GDP also growth. So high taxation is also dangerous. The government should take care of that one. They should not charge more than the optimum point. At the same time, low taxation. If the government is positive towards the public and they are charging less tax, then dependence of the public rate will increase. Again, to supplement that particular funds, government is going for public debt, and again they borrowed the funds, and the principal interest is also a problem to the government. So low is also, once the low taxation is there, people will consumption, the surplus amount will increase. Disposable income is increased. Once the income is increased on account of low tax, then automatically it leads or burns to the inflation of the country. So here, the economists, the helm of the affairs who are there in the finance ministry, they have to see all these factors taken into consideration, and they have to design the tax in a proper manner, in an optimum manner, so that people should not suffer. At the same time, development activity should not be hampered. That's why the high and the low taxation is also dangerous. Optimum taxation, optimum point, where that point it is left to the government, and they have to do some homework or do the lot of exercise to arrive the conclusion. What is an idle tax? What is the optimum tax that is to be charged on the public, either direct or indirect taxes? At the same time, high taxation controls inflation, correct? The people income will reduce, government revenue will increase. Then the people consumption will decrease, and the value of the money will increase, inflation will control, and stability of the prices will also be there. If high taxation is there, the stability of the prices that will happen, commodities or service. High taxation reduces the production. That is the biggest problem. Why? Because once the consumption increases the production, once the high taxes are there, people disposable income is reduced. Once it reduced, then they are unable to consume more. Once they are unable to consume more, the production capacity of the industries or services, they will reduce. And once the production is reduced, unemployment will increase. Employment opportunities will not arise. If the production is increased, services are increased in the economy, then the employment opportunities will be more. But once the production is reduced, services offered are not utilized by the public more, then every organization, they will trim the manpower. Once they are trimming the manpower, it leads to unemployment. So that's why high and low taxation is a dangerous to the country. How much funds are required for development of the economy? First of all, the government has to decide how much funds are required. Next financial year, how much funds are required for infrastructure, for welfare of the society, or subsidies, whatever it is there. First, they have to decide how much funds are required, and accordingly, the taxation to be decided. Taxation not on their own, simply increasing, decrease is not the criteria. Suppose the government next year, they don't require any funds because all infrastructure, all are completed. They should not charge any tax. Tax holiday to be declared to the public. If at all next year the government wants a number of projects to be completed, for that huge amount of funds are required. For that funds, they have to charge, they have to collect, the amount from the public by way of taxation. So here, the funds that are required by the government, that is to be arrived first, finalize that one first, followed by the tax structure. If at all they have not finalized, how they will design the tax? Suppose the funds are collected from tax to be used for productive purpose. Suppose they have designed, they have arrived this much amount is required for a development purpose. The development purpose means whatever the investment that are going to be invested by the government by collecting the funds from the public by way of taxation, each and every rupee to be productive, not to be wasted. Not to be wasted. If at all that is wasted, the purpose of taxation is defeated. And it is a burden to the public also. The purpose of taxation will be defeated. Why the taxation? For a development purpose. If the funds are received and not properly used, not a productive purpose, then waste, then the purpose will be defeated. The object of the taxation, the object of the public revenue will be defeated. That's why funds collected taxes are to be used for productive purpose. Not simply distribution for the subsidies, not to satisfy the others. Whatever the midway projects are there, complete that project. If you are unable to complete that one, what is the purpose of collection the taxes? So the revenue taxes on the public is a burden to the public. Unnecessarily, the government is imposing taxes if the funds are not utilized by them properly. That's why the productive use is very much required. Not only that one, generally, on income, any income, whether it is a income of the individuals or the particular income that is a corporates, they are getting the revenue, that is the profits. Direct tax, it is called direct tax. For consumption, if at all I am doing some consumption, on that consumption, government is charging some tax, that is the indirect tax. GST is nothing but a consumption tax. GST is nothing but a consumption tax. If at all I am purchasing some product, GST will be revealed because I am consuming that one. That's right. So the consumption tax is nothing but indirect tax. The direct tax is nothing but income tax or corporate tax. But whatever the taxes, whether it is a direct or indirect, it is a source of revenue to the government. It is a source of the main funds flow statement of the government, the financial management of the government, particularly the sources is none other than the taxes. The taxes are either it may be the direct or the indirect tax. For what purpose of the government revenue? Why the government is imposing taxes? For a development purpose. For a development purpose. The day before yesterday, everybody has seen that the Chandrayaan-3 is launched by the ISRO, and they have spent nearly 650 crores. That 650 crores is spent by the government. That amount is also contributed by the people only, by way of taxes. By way of taxes, whatever, particularly whether it is any development activities, roads or projects or the ports or airports, whatever the development activities that are happening in the country, all are contributed by none other than the public. That's why it is called public revenue. The revenue is contributed by the public only, not by the government. Government is an intermediary. The government will receive the funds by way of imposing the taxes, and these funds are utilized in a proper manner for development of the country. The welfare of the country is very, very important. All the people, all the sections of the people, they have to satisfy with the functioning of the government. And too much tax is dangerous, too low is also dangerous. Too low is dangerous to the government, too much is dangerous to the public. There is a correlation between taxation production. Higher taxation reduces the consumption. Suppose I am getting 10,000 rupees per month. Example, if the government is taxing 50%, the disposable income to me is 5,000. Then I will restrict my consumption to 5,000 only. Thereby, the consumption reduced means the demand for products is also reduced. Once the demand is reduced, the production capacity of the particular products will be they reduced by the manufacturing units. Once they reduce, then they will reduce the manpower also. Once the taxation production is correlated, not only that one, taxation and employment also. If taxation is less, people will consume more, production of services will increase, then they will absorb a more number of staff member, employment will increase. If taxation is high, then employment problem will arise, taxation and inflation. Once the tax is low, the supply of money in the economy will be high. Once the supply of the money in the high, then inflation will lead. The value of the money will come down. That's why to control the inflation, the fiscal policy of the government is to impose the additional taxes. Thereby, they will suck the money, the excess money from the public, and thereby the supply of money will decrease. That is called broad money, M3. The M3 is called broad money in the economy. That is cash with the public, time and demand deposits to the commercial banks, the time and demand deposits to the post offices or funds with the Reserve Bank of India. All are called the broad money. That is called M3. So the taxation and inflation. Once the high inflation is there, government will increase the taxes to suck the money from the economy. Taxation and productivity. Productivity is also very, very important. If productivity is there, the funds are received and they have utilized for, take for example, they have constructed the dams on the rivers, and then the water will not go into the sea, then automatically the irrigation of the agriculture lands will increase. It should be a productive purpose and not unproductive purpose. Unproductive purpose. If the government is spending whatever the tax they are collected, if they are spending for productive purpose, economy will grow like anything. Wastages should be stopped. Taxation and consumption, both are related. If low tax, my consumption will increase. High tax, my consumption will decrease. So the taxation. So there is a correlation between the taxation and production, taxation and employment, taxation and inflation, taxation and productivity, and taxation and consumption also. Without public revenue, there is no economic growth. Some of the countries, they are not imposing tax. Imposing tax, they are not, they are minimum amount of tax they are imposing, means the sources of revenue to the government is less. Once less, how they will construct the road, how they will safeguard particularly the law and order in the country, how they will initiate new initiatives like new airport construction, particularly the electricity, all are to be provided to the public. How they will provide if the government is not having sufficient funds? So that's why without public revenue, there is no economic growth. Once they have started a number of industries, then automatically employment they no economic growth. Once there is no economic growth, then increase in unemployment. Unemployment will increase, and a decrease in the gross domestic product. Gross domestic product of the country will decrease, and the national income of the country will also decrease, and a decrease in the rating of the economy. The rating, once the economy is developed and the growth is there, national income increases, unemployment decreases, and people are satisfied, the rating of the country will increase. But in case of no economic growth, the rating, particularly the standard and poor, the rating will decrease. Not only that one, all three important sectors of the economy, that is a primary, secondary, tertiary sector, all will be a problem on account of the no economic growth. For economic growth, tax is required. Tax is to be imposed by the government. Once the tax is there, they will collect the revenue and they will use for a development activity in order to improve the welfare of activities of the society. Welfare activities of the society. That's why the tax is compulsory. Zero tax is also danger. Certain low percent is also danger. High percentage danger. Low percent danger. But the structure should be at an optimum level. That optimum level from time to time to the world, particularly all countries, the International Monetary Fund, they will design the code, tax code, and they will circulate the same to the member countries, World Bank member countries. So from time to time, the International Monetary Fund, IMF, they will design the code. Suppose some emerging countries are there, some developed countries are there, some developing countries are there, some underdeveloped countries are there. How to design the tax? What are the various tax? Next, here also, whatever the canons of taxation is there, all they will define and they will collect the data and they will give the suggestions to the member countries also. That's why tax design is very, very, very a crucial and challenging one. And proper taxation always leads to growth of the country. And if the design is not up to the mark, the country will suffer a lot. As I know, that public revenue may be considered to include revenue flowing to the public budgets. Public revenue means the central government, they are having certain taxes. State government, they are imposing certain taxes. District level authorities also, they are collecting some various types of revenues, and municipal authorities and Gram Panchayat. From the root of the country, the roots of the country is called Gram Panchayat. Even Gram Panchayat also, they are imposing tax. Property tax, water tax, different types of taxes are also levied by the roots of the country, that is Gram Panchayats. From Gram Panchayats to government, particularly the central government, different types of revenues, different types of taxes, they are collecting from the public, and those funds are utilized for the welfare of the society. If at all they have 100% properly utilized, the country people will felt very happy. But in certain countries, this is not happening. This is not happening. Even though they are collecting the revenue from the public, they are not spending proper manner. Thereby, the country will collapse like that. So that's why the public revenue is very, very important. That too, the public revenue is generated through imposing the tax. The most substantial item of revenue side of the public budget is taxes. And the non-tax items are also there. Particularly fees, fines. Suppose the wrong car parking is there, government will impose a fine. Or fees are also they are collecting. And the revenue from selling and the renting of the state or municipal property, government, whatever their assets are there, they are also giving on rent to collect the revenue. So the revenue of the government, the major is the tax, others are also there, that is a minor one. But most of the countries, the major tax is either direct or indirect taxes. A tax is required unrelated to a specific benefit or received from the government. If at all you are paying some tax, income tax, what benefit you are getting directly? No. You are not getting any direct benefit. Suppose if at all you are purchasing any product and you are giving the money and the supplier will give the product. And here also, if at all you are paying tax, what direct benefit you are getting from the government? No. You are contributing for the welfare of the society. You are also one of the contributor for the development of the country. That's why from time to time, the income tax authorities, those who are promptly paid and timely paid and correctly paid, they are sending some appreciation. You are also helping us in development of the country like that. So required by the government is unrelated. It is not directly related, unrelated. Any specific benefit, what benefit you are getting, tell me. Suppose I am paying a 30% tax slab and I am paying a GST also. What a direct benefit I am getting or received from the government to the payer? No direct benefit. It is the financial, you have to pay the amount. Mandatory, it is a compulsory. If at all you are not paid, then automatically they will take action, imprisonment also. If at all you have not paid and wrongly paid also, lot of penalties, lot of impose the penalties like monetary penalties, and sometimes they will imprisonment also. Imposed by the taxpayer of the state, by the state. State means the government. But a tax is the payment is required by law, as per law, as per the land of the particular, whatever the various laws are there, we have to obey. As a citizen of the country, we have to fulfill, we have to pay. Imposed by the government, it is nothing but imposed. You are not getting any benefit, direct benefit on account of the taxes. The major source of revenue to the government, particularly tax is the main source of revenue to the government. As I told earlier, the main tax is a direct and indirect tax. And the user charges, price of charges to public goods and toll roads. If at all you are traveling on the highways, toll plazas are there. You have to pay. That is also one type of revenue. And the administrative fees, particularly every year, most of the state governments, they are getting huge amount of revenue through liquor licenses and the parking tickets also. Every state, they are getting a huge amount of liquor licenses on the liquor also. They are getting huge revenue. In addition to the sharing of the particular income tax or GST, whatever the various taxes that are levied by the government from time to time to the citizen of the country. Equities, the taxes. What is the ideal one? Internationally, the benchmark for arriving the taxes is on GDP, gross domestic product. Some of the countries, the total tax versus GDP is high, and the total taxes received by the government versus GDP low. And some countries, the benchmark is depends upon so many parameters. There is no specific benchmark because some today this year the government wants to develop infrastructure. Then they have to impose more tax. So the benchmarks are differ from country to country based on the welfare activities, based on the development activities. All these things are to be taken. That's why today the benchmarks are not defined, particularly how much tax to be collected on GDP, gross domestic product. Particularly Denmark, they are imposing tax out of the total gross domestic product of 46.90 total tax they are collecting. Either direct tax or indirect tax or social security contribution. Even in India also, social security contribution, we are paying health and education cess also. After income tax is arrived, then on your income, education and health cess is also there. That is called social security contribution. If you see the Denmark, 46.90, which is a high side. People, they are recovering imposing the tax for the purpose, and these funds they are using for development purpose. Like France, 45.010. And out of this split, tax on goods and services, certain 12.20, particularly France, and the tax on income, that is 12%, and social security, they are imposing more on social security, 14.80. But if you see the Denmark, 0.10 is a social security tax. Austria, Italy, Finland, top 10 countries, they are contributing more than more than 39%. The top 10, the 10th one is Germany, 39.50. Out of that, particularly goods services 10.50, and the tax on income 12.90, and the social security 14.9. But in India, health and education system, particularly the tax is very less when compared to the other countries. So here, country-wise, if you compare, some of the countries, they are charging more, they are imposing more, and they are receiving the money. Thereby, once the high tax is there, it will create some hurdles to the government also. Development may not be happened properly. At the same time, some countries, they are kind enough. But kind enough is not correct. It is also dangerous. Once they are not collected the tax properly, how they will construct the roads, how they will construct the bridges, how they will develop the power, how they will how they will secure their people's lives. All these things, some funds are required. That funds are to be collected from the public only by way of tax. Take for example, Bhutan, 10.70. Out of that, GST is 4%, income from income tax sources 6.70, almost a social security they are not charging. But if you see the Nigeria, the total tax on GDP is 5.50, and the GST is 1.80 out of the GDP, and the income tax contributed 2.70, and the social security 0.60. These are the countries with the least tax. But the least tax means that is also not good. But who will give the funds? Who will contribute the funds for development activities? Simply government is sitting on the chairs is not the criteria. They have to fulfill the objectives of the people, welfare objectives. They have to develop roads. They have to create employment. They have to create particularly the special economic zones. They have to create the airports. They have to create the infrastructure. And they have to give the good education. All these things are very much required. For that, government need funds. The government need funds means that funds are collected from the public by way of direct or indirect tax or other source of income like toll tax or liquor. All these things are there. So the Nigeria 5.5, but India, that is also required. If you see the Indian tax revenue percentage of GDP, it is 7.5 in March 2023. In March 2023, the GDP, particularly the both taxes put together in the GDP is they collected only 7.5. They imposed the tax from the public is only 7.5 on GDP. GDP versus tax collected by the government, either direct tax or indirect tax, whatever the various taxes are there. This is a decrease from previous earlier, particularly December 2022. It is 7.8. We are lucky enough. But it is not also not treated as a lucky. Why? Because if the government is not charging, who will construct the road? Who will provide the street lights? Who will provide the law and order? Who will they develop the IT sector? Or particularly the Chandrayaan 3 or 2 or 1, who will spend? None other than government. Indian tax revenue percentage of GDP updated quarterly averaging 7.4 from 1997 to 2023. Quarterly update average, if you see the average, always a 7.40%, which is a good one. And if at all in a developing country or emerging country, too much tax, people affordability is also a problem. Suppose the taxes are imposed from all levels of people, particularly lower income people also, then how they will survive? How they will live? If they are spending more amount for tax, their disposable income, the consumption income will reduce. If at all you are charging more on rich people, there is no problem. But at the same time, poor people also. The data reached all the time high, 10.80 in 2015. At that time, the GDP versus the taxes collected by the government is 10.5 in the GDP. And the low in 2003, we are low 3%. 3% is also not, the people may happy. People may happy on account of 3% means low taxes. But how to develop the country? How to create the infrastructure? How to create the special economic zones? How to create the law and order, border security? Who will spend? All these things are also to be taken into consideration. That's why while designing a tax, first you have to design how much revenue is required, how much expenditure they are going to spend, that to productive purpose. That to productive purpose. Then accordingly design the tax. Then accordingly design the tax. Public government official need to design taxes that promote social welfare. Social welfare people, all people should enjoy, whether it is a low or middle or top. But if at all design is not up to the mark, some section of the society will suffer. But the design should satisfy all the sections of the people, whether it is a low or middle or top. Too much tax on rich people is also dangerous. Then a tax evasion. So the people, how to avoid the tax evasion is possible. So both the public as well as the government, from time to time, the government is also asking before finance budget, tell me your suggestions. If at all it is feasible or viable, then they will implement. So that's why public and the government officials need to design the taxes that promote social welfare of the country. The main issues of the tax theories, because here today the public revenue and taxation is, I'm not discussing about the calculation, ATC like that. It is purely economics. The planning commission, or the Niti Ayog, or the finance ministry, being the professionals, we are also going to be various committee meetings, particularly in the taxation committee meetings. While designing the tax, these are the basics. These are the foundations. From the good olden days to till days, some basic principles are there in designing a tax structure. Once the tax structure design is good, country will grow like anything. So the two main issues of the tax theory is normative, that is standardization. How to design tax to promote the welfare of the society in terms of public interest, efficiency and equity. The total wealth of the country to be distributed to all the people, not to the rich people, not to the poor people completely. So that's why how to design a tax, that is called a normative tax theory. That is standardization. Promote the welfare of the society. Once you have designed the tax theory or tax structure, It should promote the welfare of the society. Welfare of the society is nothing but if all sections of the people are happy, then it is a government objective is achieved. In terms of the public interest, in efficiency and equity, nobody should avoid the tax evasion should not happen. Everybody is interested to pay the tax. That type of a system to be developed, that type of structure to be developed, that is the efficiency of the tax structure. Some tax structures, once the tax structure is there, people day one onwards how to avoid the tax like that. Second one is positive effect. That is also a tax. Economic effects of various taxes of the government. What affects the tax people decide to consume and save? If at all the government is imposing high tax, their consumption will decrease. I am ready to purchase the beautiful items like laptop or fridge or air cooler or whatever gadgets, electronic. If the government is imposing tax, where is my income? Out of my income, if government is sucking 50% by way of taxes, how to consume? Once I am not consuming, the demand for electronic gadgets will decrease. Once demand decreases, production decreases. Production decreases, the employment opportunity in the electronic industry to the public will decrease. Once the government is imposing tax, not only my consumption is decreased, but I am unable to save. My whatever the income after tax I am getting, I am simply using for consumption purpose. There is no savings at all. Once the savings are there, economy develop. If at all I am purchasing shares or bonds or a fixed deposit in the bank, then automatically banks will grow. Investments, particularly in shares or debentures, companies' growth will happen. Once the tax is high, how to save? Who bears the burden of the various taxes? Some of the taxes, particularly luxurious goods, the burden to be the rich people, not the poor people. Poor people, they can't afford to purchase the luxurious goods. So that's why the tax positive effect, that is also theory. These are the two theories. Tax policy program supports countries. Whatever the taxes that are levied or designed by the governments, it supports to the country. It supports for the economic development of the country. It supports to the prospect of particularly the welfare of the society. It increases the welfare of the society. How to raise the revenue in support of the spending needs? Support of the spending needs and how structure this tax and the revenue system. These are very much required. The tax policy program supports to the countries, even whether it is India or Japan or USA or Australia, every country, the tax policy is very, very important. How to raise the revenue? Development activities are there. Security is required to safeguard the country, particularly the boundaries of the country. Army, Navy, Air Force. Who will bear that amount? People only. For the sake of the people, the government is deputed the Army, Navy, Air Force. Spending needs and how to structure the tax and the revenue system, that is also required. The key objective is the tax structure. Any tax structure, efficiency should be there. Equity, proper distribution. I should not levy high taxes on poor people. I should not levy less taxes on rich people. That is one of the canons of taxation. The affordability, based on their income, the tax structure should be there. If at all I am imposing high tax on poor people, the country poverty will increase further. The productivity of the people will decrease further. So that's why the haves and the have-nots are to be taken into consideration. So the equity, proper distribution, whatever the minimum essential goods are there, particularly roti, kapda or makan for poor people, I have to charge less. If at all the rich people, diamonds and other things, and luxurious goods, I have to charge more tax. Equity is very important. Impact of tax incentive work. Suppose you are taxing more. I am inclined to work. Psychological feeling are there, people's psychological feeling. Whatever the work I am doing, at the end of the month, I have to 50% to the government. Why should I work? Why should I increase the productivity? It will not motivate also. So the government also, they have to think it of that particular income levels and accordingly they have to charge. If at all too much taxes there, the work will hamper, productivity will decrease. See, too much taxes contributed or it decreases the savings of. Suppose if government is taxing me 60%, 40% is my income, disposable income. Out of that, whatever essentials are there, if I purchase, where I have to save, whether in deposits or savings bank account or debentures or equity or mutual funds or insurance, it is very difficult for me to purchase or to invest. Savings, once the savings are there, investments will increase. Once there is no savings, no question of investments. So the tax should be neither too high nor too low. According to Dalton Theory, particularly on taxation effects, he's also, so many economists are there. They have enlightened the various theories, particularly on the taxation. To even today, whatever the theory is, whether it is Adam Smith or Dalton Theory, all are continue as a status quo. Those are the best principles designed by them. Today, all governments across the world, they are adopting the particularly Adam Smith or Dalton theories, economics. Today, in most of the countries, the shortage of economists are there. They know how to develop the country. According to Dalton, taxation effect can be studied by grouping. Dalton theory, particularly on taxation, he classified into three effects. Effects of taxation on production, effect of taxation on distribution, other effects of taxation. Every economist, he defined the different theories, particularly the effect of taxation on production, effect on taxation of distribution, and other effects of taxation. All these things are defined. Coming to effect on taxation on production. The main effect of taxation on production, the ability to work, save and invest. If taxes are low, my ability to work will increase. If taxes are more or less, my ability to save is more. Once the savings are there, definitely I will invest in various investments that are available in the market, whether it is shares or debentures or bonds or bank deposits or NSCs or KVP or whatever the gold bonds, etc., etc. If there are too much taxes there, how to save, how to invest? If a savings, no savings, no investments. If I want to save, then taxes should be reasonable. Willingness to work, save and investment. The willingness is very, very important. Suppose I am willing to work. The employer is giving 100 rupees. Out of 100 rupees, government is they forcibly taking by way of taxes 60%. Then no interest to work. No innovations will happen. No productivity. And simply they are going, work and come back. Willingness to work. Once the taxes are more, willingness to will lose. Willingness to invest will also lost. Effect of taxation on allocation of resources. Suppose less tax is there, I can purchase some luxury goods also, some electronic gadgets also. If at all the tax is high, then my essentials, roti, kapda or makan, that's all. Nothing else. So the tax allocation of resources. If at all the less tax is there, then this month I will purchase some TV. Next month, particularly the laptop, and that. So the allocation of the resources, what I am going to purchase, or if at all less tax is there, I can go for a picnic, or I will visit to other countries also, because my disposable income should be increased on account of the decrease in the taxes. Ability to work, save, invest. Imposition of tax reduces the disposable income. More severely, the poor sections of the society. Their purchasing power, ability to acquire necessities and comforts and luxuries, and reduces their consumption. Therefore, capacity to work. Once I am taking less calories of food, then automatically my energy levels will also decrease. Once my energy levels are decreased, how the capacity to work will increase. So the taxes should be reasonable, particularly on the poor people. If at all you impose more taxes, then automatically consumption will do, their energy levels will also change, capacity to work will also decrease, capacity to save will also decrease. Investment is a function of saving. More savings, more investment. No savings, no investment. And the potential and resources for investment are curtailed. Once my taxes are more, then automatically my disposable income will restrict. And whatever the essentials I will purchase, then I will stop to save. There is no funds. Stop to save means there is no funds available to me. Once there is no savings, no investment, curtailed to the extent of increasing taxation. Second one is willingness to work. Save and invest. The effect of taxation, people willingness to work, save, interest are partly due to monetary burden of the tax. Purity, due to the psychological state of mind of the people, particularly the taxpayers. Willingness to, I don't want to will. So if at all I work, suppose take for example, if at all I put extra energy and work, the employer is giving less amount means I'm not interested to work also. Once I am not working, I am not getting income. Once there is no income, no question of savings. No question of savings means no question of investment also. Willingness to work, save and invest also affected by psychological of the taxpayer. Taxpayer have feeling that tax is a burden. Whatever I am putting from morning 8 o'clock to night 8 o'clock, 12 hours, at the end 50% is taken by the government by way of taxes. Why should I work? Why should they raise the productivity of the company? And the psychological state of mind taxpayers disincentive. It is a disincentive, not incentive. Disincentive effect on the willingness to work, save and invest. This is a Dalton's theory, particularly all theories of tax. If you go through, then you will get a fair idea how to design the tax of the country, whether it is India or Japan or Sri Lanka or any country, Bangladesh or Pakistan, whatever the country is, the net effect upon the elasticity of demand. The demand, particularly more tax means the demand for products will reduce. Less the tax means the demand for products will increase. For income, elasticity will reduce the willingness to work and save and invest. This is the second point. Third one, effect of taxation on allocation of resources. By diverting the desired directions, if the government wants some directions, particularly I have to curtail these products. I have to encourage these products means they will impose less tax on desired products. Undesired products they will impose high. Take for example, by diverting the resources to the desired direction, taxation can influence volume of the size of the production or pattern of the production of the economy. Suppose particularly some harmful products are there, liquors and all these things. For that, government impose more tax. Then that production will reduce and they will encourage other products. So the volume and size of the production, pattern of the production in the economy. Today, that is not happening. Once the people are interested in particularly harmful products, the government is also encouraging that the products because the government revenue will certain states they are always depending on these products where they are getting more taxes, particularly the manufacturing of various liquids. Pattern of the production, it may be the ultimate analysis produce beneficial effects of the production. High taxation, harmful tax, commodities will reduce the consumption. If you impose a high tax, then people won't go that side. But today, what is happening in the governments? They are encouraging indirect. Because on account of that encouragement, they are getting more public revenue. That revenue is not useful to the development of the welfare of the society. Welfare of the society means all people should be enjoyed. If at all they are taking harmful and drugs commodities, is it a healthy society? Whether that particular people are useful to the society or not? No. This will discourage the production. These commodities and the scarce resources will now be diverted from their production to the other products which are useful to the economic growth. So, the direction of the government, which production to be increased, which production to be decreased, proper taxation structure is also very important. Similarly, tax concessions on some products are given locality considered backward. In some places, government is encouraging by reducing the taxes. Thereby, the particular backward area will develop. That's why government also increasing the tax holidays and some concessions in certain states. Take for example, northeastern states. Northeastern states, the government is encouraging by reducing the taxes. Well, because those states are also to be developed today. Because the development is equal to all the states, not certain states, not leave the certain states like that. Similarly, the tax concession, some products are given in locality, which considers a backward. Thus, the taxation promote a regional balance in development. Balanced growth is required. Balanced growth means all states are equal balanced growth. Some states are not developed, some states were highly developed. That is not the government objective. Or social welfare means people are spread or concentrated, not concentrated, spread across the country. And they have to provide. Once you have given some concessions with low backward place states, then automatically the consumption will increase. Then automatically industrial growth will increase, and the balanced growth, regional balanced growth will also increase. Effect of taxation on distribution. It is like a meter. You have to change the meter according to the needs of the society, according to the side effects of the society. The effect of taxation on distribution. Whatever the poor people are there, minimum tax. Whatever the rich people are there, maximum tax. Middle class, via media. The effect of the taxation, distribution of income, wealth, different sections of the society. The society consists of the below poverty line people, poverty line people, middle class income people, top line, particularly the rich people are there. Different sections are there. Accordingly, I have to impose the tax. They have to contribute that to the tax. I should not impose equally to all the people. The haves and have-nots. The rich people always effort to pay. Poor people, they may not afford to pay. That's why the minimum and the maximum tax to be calculated properly. The effect of taxation, distribution of income, wealth among the different sections of the society depends upon two important factors. That is the nature of taxation, kinds of taxation. The nature of the taxation and the kinds of the taxation, that is called effect. What is the nature and the kinds of taxation? Particularly the nature of taxation. The nature of the taxation influences the distribution of income and wealth among the different sections. Wealth is concentrated in certain people. Wealth is very less in certain people. Income levels are more in certain people. Income levels are less in certain people. The nature of taxation, accordingly, you have to design. So, effect of a regressive taxation on distribution, effect of a proportional taxation on distribution, effect of a progressive taxation on distribution. These are to be followed, whether it is a regressive taxation or a proportional taxation or progressive taxation. So while designing the tax, these are very important, whether it is a regressive or proportional or progressive. And this tax should not be a burden to the common people. Their consumption should not sacrifice. Their essentials are to be continued. At the same time, luxuries are enjoyed by the rich people. I can build more amount from them. The affordability, the capacity to pay the tax is also more in the rich people. What is that regressive taxation on distribution? The regressive means uniformly regard the income. Under regressive taxation, burden of taxation falls heavily on poor. That is not correct. Than rich, all people. Regressive taxation may increase the inequalities. Poor become further poor, rich becomes further rich. That is not the object of the welfare of the society. Regressive taxation may increase the inequalities and the distribution of income and wealth, and it widens the gap between the rich and the goal of the government. Any government is the gap of the rich and poor people to be minimized, particularly in the developed countries. That is happening. But emerging or developing country like India, the gap is wider day by day. The richer becomes richer, poor becomes poorer, the wider. But the government objective is narrow them. Example, indirect taxes, entertainment, stamp duty, customs duty, common to all. Particularly in the indirect taxes, GST is there. common for whether rich people or poor people, if they are purchasing some clothes or food, that is not correct. But here within the GST also, they are removing certain goods not comes under the GST purview, particularly the poor people, based on the public opinion and all these things. Proportionate. Here, tax rate. Tax rate is common. Under the proportional tax levied uniformly to the rich and poor people, when the tax rate remains the same, it creates inequality. They are all products. Here, tax is common. Percentage of tax. Proportion. In this way, burden of taxation falls heavily on the poor again, and every individual will pay the same percentage of their income GST. This regressive and the proportion is not suitable for the developing or emerging countries like India. They have to redesign certain products completely not comes under the purview of the tax. Particularly those products or those services which are being availed by the poor people. Now, in most of the country, the progressive taxation structure is there, including India. Higher income people, higher tax, lower income people, lower tax. That is a progressive tax. Progressive is the best because if inequalities are there, if rich and poor people are there, progressive tax system is the best one. Effects of the progressive tax on distribution. Under the system, progressive tax rates go up with increase in the income. If their income is increasing, the tax will increase. Thus, the system is inequalities in the income will be reduced. That is the purpose of the government. That is the object of the government. The inequalities are to be reduced. The major portion, income and wealth, rich is taken away by way of higher tax rates. Hence, the progressive tax tends to reduce the inequalities. Inequalities are to be reduced. There is no question of the different sections of the society. All are uniform. The uniform levels of income, uniform levels of wealth. That is the prime motto of any government in the world. That is not happening in the world. Rich becomes richer, poor becomes poorer, and poor are suffering, and rich becomes, they are not suffering. The kinds of taxes. You know, there is two kinds of taxes. That is a direct tax and indirect tax. Taxation depends upon the kinds of the tax, direct and indirect. Direct tax. Effect of direct on tax on distribution. Direct taxes taken the taxation on income and property. It attempts the income of the richer section and transfer the income to the government. And the government resources raise the standard of living of the poor. So, in this way, the government is collecting the taxes from the rich people and they are distributing the same to the poor people to improve their standard of living. That's why some concessions, subsidies, all these things they are providing to the lower strata of the country, that is poor people. Standard of living to be increased. They are in slum areas. They are in huts. Their living conditions are bad. Their medical facilities are not up to the mark. Their level of education is not up to the mark. Because that's why the government object is collect more tax from the rich people, distribute the same to the poor people. Therefore, all those taxes which fall heavily upon the high income group and can have favorable distribution effects. This type of this one is good. Indirect taxes. The effect of indirect taxes on distribution. Indirect taxes are levied on commodities. They heavily on lower and middle groups who spend a larger portion of their income. commodities, particularly essential commodities. Whatever the food items are there, whatever the grains are there, whatever the oils are there, whatever the soaps are there, whatever the essential products are there. Larger portion is the consumption by the poor people. In such a situation, indirect taxes adverse distributional effects. But taxes are common. GST is common. Whether he is a poor or rich, if at all they are purchasing sugar, rate is common. The tax is common. But how to overcome that particular problem? Because I want to support to the poor people. However, in the indirect taxes made progressive, the necessaries are exempted from the taxation. Particularly the poor people, whatever the products they are using, if are completely exempted, then some balanced approach will be there. Low taxes and the luxuries are subject to high taxes. Diamonds, liquors, whatever the luxury goods are there, all are high tax, high GST rates. Other effects of taxation. Under this category, effect of taxation on employment is there, price stability is there, regulatory effect of taxation is also there. High taxation, particularly the effect of employment. Too much taxation definitely increases the unemployment of the country. Low increases the employment. Why? Because of consumption. If low is the taxation, my disposable income is increasing, then I can purchase more products, more production, thereby leads to employment opportunity. High means my disposable income will rise. Thereby, I am not consume more, production will reduce. And the price stability. The price stability, particularly in low tax, price stability will not be there. Why? Because everybody is having flushed with funds. And the demand and supply gaps are more. The price, sometimes the price is escalated, the price is reduced like that. Regulatory effect. Particularly the regulatory, whoever the government is there, that effect. One is effect on employment. If resources are collected via taxes, utilized for development project, it will increase the employment in the economy. If the taxes affect the volume of savings, investment badly, then recession and unemployment problem will arise. So GST also affects on Indian jobs. So here the effect of employment is also one of the area. Not only that one, effect of price stability. The object of the taxation during inflation should be reduce the excess purchasing power. People are, if at all in my pocket 1 lakh is there, I will spend lavishly. The value of the money will decrease, and it is nothing but inflation. If I am having only 100 rupees in my pocket, I am using that 100 rupees in a perfect manner. So that's why here in the economy also, the money supply, particularly the purchasing power, excess purchasing power always leads to inflation, price stability. This can be done by raising the tax rate. Immediately government will intervene. They will increase the tax and imposition of new taxes during inflation. And in this way, the price stability will happen. And effect of price stability. Increasing, decreasing, increasing, decreasing. Increasing means the sufferers are the poor people. Decreasing, okay, no problem. Increasing means that the rich people will not suffer. Affordability is there. The effect on price stability, on the other hand, reduction in taxation during depression helps to increase the economic activity and employment. Hence, the object of the taxation during depression should be increasing purchasing power of the people by utilizing tax revenue for creation of development activities, which are employment generating and income generating. So once the taxes are more, price stability will happen, but unemployment will increase, production will decrease, consumption will decrease. That is also to be taken into consideration. Like that's why my speed of the economy, I'm in driving seat. The economy drives in a structured manner, efficient manner. Too much speed in a car is also dangerous. Too low is also dangerous to reach the destination in time. At what speed, at what accelerator I am using, and how my steering is operated, all these things are within the control. Finally, I have to reach the destination in time without any risk. So that's a government objective is also achieve the social welfare of the society, welfare of the society, whether it is a high or low or sometimes high, sometimes low, it depends. They have to tune that particular taxes system accordingly. Regulatory effect. Taxation can be used to instrument of regulating consumption and projection. And the consumption structure of the production can be regulated and planned by instrument of taxation. With the help of the taxation, the government is control the production, government is control the regulate the consumption also. For example, government wants to cut the production of particular heavy taxation, particular commodity, then heavy taxation. Likewise, stimulate the production, certain commodity tax exemption and a concession can be given. So that's why the regulator is nothing but a government, particularly with regard to taxation. And they will tune the production and consumption accordingly. Now, in any country, almost in across the world, business cycles are there. According to business cycles, the tax structure should be. Suppose the starting, growth stage, peak level, and diminishing or depression will happen. Decline will happen. Accordingly, the tax structure to be designed. If at all people are the growth stage is there, the government can increase the tax. If at all decline stage is there, if government is imposing more tax, further decline will happen. The business cycles are also to be taken into consideration while designing the tax structure, whether it is a direct tax or indirect tax, whatever the taxes are there, follow the business cycles of the economy. What are the business cycle? Time. GDP is increasing growth. Tax more, no problem. Peak level, tax more, no problem. Recession, your taxes to be reduced. Otherwise, the country will collapse. If at all you are considering the same tax rates of that particular growth and peak in the recession, country will collapse. So, thorough or depression stage, the taxes have to be minimal, barest minimal level, or sometimes nil also. Otherwise, the economy will collapse. Once the growth level, peak level rates are used in recession, production will, the people will not purchase the products and tax burden and the consumption reduces, then automatically the business will hamper like anything. The business life cycles are also to be taken into consideration while designing the taxes. Individuals must same price for economy reach equally to all public. The goal of the design tax introduce the least distortion and keep the society close equal to all public. Whatever the taxes you are going to design, it should be accepted by all the people of the society. Tax policy designed to work in redistribution programs to achieve this goal. Whenever the taxes are collected, you have to redistribute it to various sectors. Our three important sectors, some whatever the revenue is there, you have to allocate some revenue to the agriculture development, revenue to the industry development, revenue to the you spend revenue to the development of the service sector also. That's why the tax policy designed redistribution program also. And for this, personal income and wealth is the person that is income tax or wealth tax. Income tax individual covering each issue such as taxation of employees, professional income and wealth. Individual tax is a core tax. For many countries, design of personal income tax directly how people will work or save or invest. That is to keep it in mind by the government whenever they are designing the personal tax, that is an income tax on the individuals. It includes resources of income tax, wealth tax, capital gains, analysis, distribution of issues and equity, and how the individual behavior responds to these taxes. Whether people are accepted this tax structure or not, government simply imposing is not the criteria. If there is a resistance, if people are not accepted, refine or fine tune the taxes. The elasticity of labor supply is also very important. Once too much, this one is the taxes is there. Employees, unemployment, the employees are not interested to work. And unemployed are more. In that particular case, you have to reduce the tax. Thereby, consumption will increase, production will increase, people will, unemployed will absorb as an employees. Business income and assets. The key taxes include corporate income taxes and capital gains. Includes taxation of a business entities such as companies or partnerships or LLPs. It links closely to the international taxation also. Why? Whenever you are inviting the other people to start the business within the country, particularly easy of doing business, if your taxes are harsh or not good, then nobody will come. Nobody, even though you are talking so many things, people won't start their businesses within the country. The favorable tax structure system should be exist, particularly for the industries. That's why it is closer to the international taxation. The importance of multinational enterprises, sector-specific resources under the sector-specific taxes. That is also best. Sector-wise, if you split the tax, particularly the corporate tax, wherever the important sectors are there, reduce the tax. Where the sectors are, that the sector is not important, impose high tax. Sector-wise taxes are also very important. The need of our in the country also, particularly in our country. Consumption. Reasons on taxes imposed on consumption. The key taxes excise, customs duty, GST includes excise. Countries impose goods such as fuel, tobacco, alcohol, beverages, as well as taxes imposed on influence the health objectives. Certain goods you have to impose more tax, no problem. The health of the people is the health of the nation. The health of the people is the health of the nation. If at all you are imposing more taxes on particularly the alcoholic beverages, then the consumption will reduce, then health of the people of the country will also increase. specific sectors. You have to identify specific sectors, infrastructure, now particularly the startups, or now that particularly alternative renewable energies. Identify the specific sectors and reduce the taxes. It is there in the country, but that is to be refined. The resources of tax issued are a specific particular sectors of the economy. The sectors including financial sector. If banks are to be encouraged, then separate a tax sector. Renewable energy and going natural resources taxation, including the fiscal instruments and the telecommunication. That is also required in the country's development. So, specific sectors, tax structure, tax policy, institutional building. Suppose if you want to encourage some type of institutions in the country, you have to give some concessions. That's the resources of institutions that are necessary for a particular country. Well-functioning tax systems should be there. Information, key institution building issues such as role of institution, the role of tax policy units, and analysis of the taxes, etc. But at the same time, transparency should be there. Tax transparency is very important. Resources on how countries can nurture greater transparency in the taxes. No hidden agenda. Transparency. Delegation of powers should not be there. Uniformity is there. Once the transparency is there, it influence the other countries, particularly investors, definitely they will invest their funds in the country, including resources on tax transparency. Whatever the resources are, the government is getting on account of taxes, transparency. And the IMF Fiscal Transparency Code, particularly the International Monetary Fund also, they defined some code, particularly on taxation. That is also to be implemented by the developing or emerging or developing countries also. This code includes initiative of faster transparency in payment and management of resources revenue. So transparency of the tax system is also very, very important. Clear, crystal, and well-defined. Current issues. Tax policy need to be responsive to the changes and demands of the environment. It is not static. It is a dynamic one. Adopts the world changes. Today, digital era. If you encourage the digital sector, then automatically the digitization will increase. Then the government is also happy. The main currency relevance tax policy program supported by analytical work and current issues, international taxation, COVID crisis, gender equality, digitalization, all these factors are to be taken into consideration while designing the tax structure of the economy. Digitalization. Resources and tax aspects of digitalization of economies. Resources and studies new tax challenges raised by digitalization and how existing rules can be perceived as unfair. Today, all are digital transaction, where the central data is available. How to impose the tax, that is also very, very, very difficult to the tax authorities. Highly digitized business have large base of customers. Definitely large base of customers, large revenue. There is a large scope for the government to recover the tax. But where they have no fiscal presence, where the company, where it is existed, creates difficulty in determining the profits to be tax. International tax. To invite the other countries to open their ventures or companies within the country, international taxation. Resources on cross-border taxation issues, particularly if at all particularly the FEMA Act to be modified suitably. Contribution of global debate, modernizing the international tax system, including identifying and quantifying the problem, which existing architecture of the tax avoidance, through profit sharing as well as tax treaties. Today, the avoidance of the tax is increasing. Some of the countries, no tax. They are enrooted to that particular country. So, to arrest or to avoid that type of a situation, the international tax structure should be revitalized. That is, once that is there, then automatically every country will happy. Inequalities. Some of them are in slum areas. Some of them are in skyscrapers in the country. Even Bombay, if you see, slum areas, people are living. Some people, post localities, South Bombay. Resources and tax policy elements inequalities. Excess income inequality is a detrimental to the macroeconomic stability and economic growth. Resource and tax policy issues relating to inequality, how tax system can be considered inequality in policy design. That is also to be keep it in mind while designing we have to collect the tax and redistribute the same to the low strata people or below poverty line people. Otherwise, some of them are still in that slum areas. Some of the people are living in skyscrapers in the metros, etc. Climate change. The tax structures to be designed, climate change also. Today, whether thermal carbon emissions completely spoil the ecosystem, ozone layers are depleting, and particularly this carbon emissions problem. Solar encourages the solar, give the concession, lower taxes, then automatically the climate change, we can arrest that particular ozone depletion layer also. Resources on the role of taxation, reducing the rate of carbon emissions and encouraging the actions to be adopted. Resources and analysis to assess the country's difficult task in reducing the carbon emissions and adopting the change. Tax policy can be key driver to change in the energy use, change in the relative prices, and taxing unwanted carbon pollutions. So today, almost EAS, energy as a service. That concept, most of the corporations, they are using the EAS, energy as service. So most of the big corporates, particularly I'm from State Bank of India, even State Bank of India also, whatever the rooftops are there, the rooftops are constructed by the particular solar panels, by the startup companies with their own capital expenditure, and this link to the grid, and the bank is also saving a lot the energy on account of EAAS, energy as a service. That is a new model, and that model is adopted across the world, and like that, in that model, the tax structures are also reasonable and a lower level also. Principles of tax, whatever the principles are there. The economists believe that the broad tax is 5 principles. Easy to collection. Tax should be collected easily, whether it is offline or online or through tax collectors. Easy of compliance. Today, on account of CPC at Bangalore, particularly online, within no time, 10 to 15 minutes, I am able to complete the filing of tax if at all documents are readily available. And within 4 to 5 days or max 1 week, refund is also there if refund is eligible, and the flexibility. Whenever the business cycles ups and downs are there, the suitable tax structure to be flexibility should be there, and promote economic efficiency. Ultimately, whatever the tax they are getting revenue, that is used for economic development of the country, and the end results. The end results of a taxation is economic growth, welfare of the society. That is to be achieved. Adam Smith also theory on tax. Different economists they told about the tax. The good tax system should be four principles. One is equality, certainty, convenience, and economy. Equality. What is the equality? Particularly poor people, their affordability is less, tax less. Rich people, affordability is more, tax more. Certainty, on which date, what is the deadlines, what is the filing of a return and the tax to be paid, all these things. Either it is a TDS or quarterly or month, half yearly that to be paid. Convenience. It should be online or offline or through tax economy. Whatever the taxes we are correcting, and the administrative cost is much more than the taxes collected, then the tax is not to be imposed. That is called canon of economy. These are still regarded as a characteristic of good tax system. Governments are expected to maintain economic stability, full employment. What is the purpose of tax? Economic stability should be there, full employment, no unemployment. Reduces inequality, the rich and poor people gap to be reduced, and income distribution, whatever the income they are receiving by the government through taxes, that is to be distributed to the people, particularly the low income people, and they also perform the welfare of the society. That is the characteristics or objective of the good tax system. To promote the economic growth, development, especially in the developing countries, not only through encouraging private enterprises, but also undertaking the production of some strategic industry. Even Adam Smith also clearly and categorically told, in any country, encourage the private enterprise system also. And some strategic industries are to be controlled under the government. That's why he wrote one book, How the Wealth of the Nations. Please go through that one if time permits. Go through that one if time permits. Production capacity of the economy increased, and he thought that private enterprises working the basis of the free man. Today, privatization is also gives good results because it is a free market mechanism. On account of a number of sellers, the price discovery mechanism is happening. Today, earlier, take for example, pharma industries. The MRP rate only we are used to purchase. Today, some companies they are offering 10%, some companies they are offering 20%, some companies they are offering 30% also. Different companies they are offering that Apollo Pharmacy or Tata people or whatever the companies. So the free market mechanism is possible once the government encourages the private enterprises. For rapid growth of the economy, economic growth, the private enterprises is inevitable. Adam Smith also clearly told, public finance influenced by the economic philosophy, free private enterprises. Adam Smith also recommended, the sole object of the government is raise sufficient revenue. Once the government is getting revenue on account of tax, suppose you take for example, all are under government control only and incurring losses. And the corporate tax, who will bear it? Who will pay? Nobody. If a private enterprises are there, they will get the profits and they will contribute the revenue to the government also. The free private enterprise that gives good results to the economy. Modern economists added to the principles of the characters. Whatever the Adam Smith, the four principles are there. Modern economists also they added, but the main principles are the four only. That holds good till now also. Tax policy and administration. Once the tax policy is designed, administration, timely recovery from all the people without any extraction, with the least cost, that is also very much required. The administration, no discretion powers. If at all you have given discretion powers to the income tax authorities, then the bribing will increase. Malpractices will increase. So that should be minimized. Compulsory tax system is a key policy instrument. It may be negatively or positively influence the investment. Tax policy relates to the formulation of a tax total, which is supposed to the investment. So once the tax structure is good, savings will happen, investment will also happen. It covers advantages and disadvantages of alternative tax policies. Choosing the twin goal offering tax system attractive to the investment. If at all you are invested in particularly some bonds, some public sector bonds, or some infrastructure bonds, no tax means it encourages the investment in that particular sector. Or gold bonds, all these sovereign gold bonds, and the same rising the key pillars of the business enabling the environment such as infrastructure. If at all government wants to they develop the infrastructure, they have to give sufficient concessions, particularly infrastructure bonds like that. A poorly designed tax system rules their application, non-transparent, over-complex, unpredictable, discourage and to project the cost and uncertainty. So the tax system should be designed properly. It should not be a complex one. It should not be an unpredictable one. It should be a transparent one. Then only it leads to the investment. Systems remove the excess administration discretion. Some of the, while filing the tax return, discretion powers are given to income tax inspectors. That is a dangerous. Invite corruption, undermine the good governance. Objectives are fundamental in securing the attract of the investment environment. So that's why excessive administration. Today, the excessive administration discretion is reduced and CPC, Central Processing Center, located at Bangalore, particularly for direct access, doing miracles. Volumes are attacked, least cost. The canon of economy, particularly the Adam Smith principle, is satisfied now. Policymakers are therefore encouraged to ensure the tax system acceptable tax burden. Because as an individual, I can afford some amount, not too large amount. If at all the government is imposed a large amount, then I will search for how to avoid the tax. Accurately determine which keeps the tax compliance and the tax administration cost in check also. So today, the Aikar Bhavan, particularly in Hyderabad, I have seen the nearly 80% of the building is nobody is there. Only the capacity utilization is 20% only. Because on account of centralization of the tax returns through online system only. Even a district headquarters everywhere, income tax department, how are the officers are there today on account of CPC. Most of the recruitment is reduced and the administrative overheads are also reduced to a large extent. IMF assists countries, International Monetary Fund, understanding the bottlenecks in the current system. If at all any country is not designed the tax structure properly, then IMF will assist to develop a good system. They are as good as a consultants to the countries. Proper change in the efficiency system, ability to mobilize the revenue on one hand, attract the right kind of investment on another. So some of the emerging countries, some of the underdeveloped countries, some of the developing countries, always they are interacting with the International Monetary Fund to get the how to design a good system, good tax system, and how to design a tax system to encourage the investments. It identifies 9 important questions relevant to judging the effectiveness of the country's tax policy. And specific, what are the support to investment? For support to investment, because investment should also be there. Once the investments are there, economic development, and once the industry growth is there, unemployment will decrease. What are the 9 important questions that are identified? 9 policy framework for investment, particularly the IMF design. What are the 9 principles? Consistency. The tax should be consistent. Not to this year low tax, next year high tax. After that, consistency should be maintained. Actual burden on the domestic profit. How much burden they can absorb, to that extent only the tax should be. actual versus tax burden, that is to be compared, and potential tax effect on investments. Potentials, particularly how much tax boost up the investment in the economy, and tax distortions to be avoided, and the determination of tax income to be, and unintended tax incentive effects, and expenditure reporting, and tax international tax cooperation, all these things, nine proper the investments, the tax policy rules are defined by International Monetary Fund. Level of tax revenue. Tax revenue, first, how much revenue is required by the government? How much revenue is, that's why in the first slide I told about how much government is going to spend in the next year. Accordingly, taxes are to be designed. To the next year, no need of any revenue means the government should not impose any tax. No development activities already developed, all our roads are completed, all security and the government is adequate income, don't raise that particular tax. Or if possible, reduce the tax. The level of tax revenue, how much? Some of the countries, they are telling not exceeding this much percentage in GDP, gross domestic product. It is a benchmark. Benchmark is to be designed. The level of spending of the desirable developing country given at a national income. In this national income, how much tax, whether it should be 1/10 or 1/3 or half, design first and accordingly impose the tax. First you define, then impose the tax. Determine the optimal tax level, conceptually equivalent to determine the optimal level of the government spending. If a government is spending, the tax revenue should be synchronized. If a government spending is less, impose the tax less. If a government spending is more, increase the tax. And this should be synchronized. Some countries, particularly, they are taking the statistical based approach also. They are comparing with other countries. Suppose India, particularly emerging country, similar emerging country, how much they are imposing on the GDP or national income, and accordingly. But here, the similarities and dissimilarities may be there. So that is only useful for imposing the tax, but in the real sense, real meaning, that won't give any purpose. This comparison with the country's level tax, relatively the countries taking into account above or below average. This statistics no theoretical approach. It is only a statistical approach. How much that country is imposing, why not that much? And here no theoretical approach and does not indicate optimal tax level. This won't give any optimal tax structure to the country. The most recent data, particularly the members of Organization for Economic Cooperation and Development, they have represented whatever the countries, OECD countries are there, they are charging 38% on GDP, and other countries, particularly industrialized countries, compared with OECD, the industrialized countries that are charging 38%, and other countries that are charging 18% on the GDP. Lot of aberrations are there. So these are only a rough idea it will give, but real sense means the country has to design their own parameters. What is their problems? What is their economic problems? All these things are to be taken into consideration designing the tax. Economic development is generated additional needs for tax revenue to finance rising the public spending, but at the same time increase the country's ability to raise the revenue. And makes the most important is the level of taxation per se, how revenue is used. Simply taxing is taxation. Taxing is not the criteria. How to utilize the funds in a proper manner. If you are giving burden to the people and a tax and get more revenue, and this revenue is misutilized by the government, then the people will suffer, development will also not happen. Selecting the right tax system is very, very, very important in the present days. In developing country, market forces are increasing. Allocating, design the tax, minimize the interface of the allocation of a process. The system should be simple, transparent, and administrative procedures. But designing is a very, very, very tough area, challenging area. And if at all they understand the economic problems and the development activities and welfare of the society, all are taken into consideration, then designing is very easy. Today, that is not happening in most of the countries. Whatever the last year tax is there, 10% rise or 20% rise, and accordingly they design the tax. That is not the criteria. It is gives a lot of disadvantages when compared to the systematic way of designing the tax structure. Tax holidays. Today, some governments they are giving tax holidays for the development of the backward districts, etc. And these are tax holidays, the most popular in developing countries, and higher. Some of the companies they are availing the tax holidays. After that, the period is over. Again, they will close the old firm and they will open the new firm, and again they are availing this type of tax holidays or the tax incentives will not be useful for the development of the economy. For example, close down the restarting of the same project under a different name, but with the same ownership. This type of tactics we want to work in the development of the economy. And particularly compared to the tax holidays, tax credits and investment have a number of advantages. And while investing in subsidies, particularly provident fund and other things, generally quite a problematic one. Out-of-pocket expenditure for government upfront, non-viable investment much as a profitable one. Particularly some of the governments, they are giving upfront at the time of starting the project. That is not correct. That is also particularly depreciation allowance or investment allowance. If at all the governments are providing, then effective use is there. And best order, transparent, stable, and all these things are required. Encouraging the regional development, particularly whenever the tax incentives are given. Why government is giving the northeastern states? Because those states are to be developed like other states. That's why not all tax incentives are equally effective. Some tax misutilization is also there. So accelerate the depreciation, particularly investment allowances or tax credits. That is best when compared to giving upfront benefits to the companies like tax holidays like that. Tax holidays and investment subsidies among the least meritorious. As a general rule, indirect tax incentives should be avoided and discretion in granting incentive to be minimized. This is in brief about what I am given, particularly about the public revenue and tax system. Designing the tax structure is very, very important. And I'm concluding this one. An effective tax system is a platform for advancing a country's economic interest, promoting prosperity for its resident, that is the public or people of the country. Well, there are many recommendations for establishing the good tax systems, particularly whether it is Adam Smith or International Monetary Fund code, all these things are there. Still, what are the characteristics of the economy? That is very, very important. How much development to be happened? That is also very important. What are the economic problems of the country? That is also to be taken into consideration. How much revenue is required? How much development activity? How much funds are required? Accordingly, revenue to be generated. Not simply last year this much tax, this year double or triple or 20% extra, 30%. That is not correct. While there are many recommendations for establishing a good tax system, there are some underlying elements are there that can help a robust tax system. Even though so many people come to the committees or others, they are giving recommendation. It may be suitable, may not be suitable. But first of all, what are the development? What are the various sections of the people? How the tax is giving burden, and whether the tax imposition lifts the or down the economy, that is also to be taken into consideration. To conclude, 5 fundamental pillars of the good tax system are fair system. It should be fair. No discretionary power. Adequacy. You should not impose the tax as much as you want. If government wants more revenue, you should not impose more tax. Simplicity. Easy to understand. Every common citizen to understand the tax system. And the transparency is very much required. And the easy administration. No discretion, no delegation of power to the income tax authorities. Otherwise, it leads to corruption. These are the 5 fundamental pillars of the good tax system. So this is in brief about the particular the government revenue through taxation. So thank you very much for giving me an opportunity to discuss about the revenue, government revenue through taxation. Thank you. Thank you to all.
Sir, we have got 2 questions from the members.
Tell me, madam.
Yeah, first one is, how do government decide how much tax to collect?
It depends upon, first I have to arrive there, how much funds are required for the development of the economy. Accordingly, I have to design the tax structure. Suppose the country, next 1 year, the country requires 10,000 crores for roads, for rivers, for airport projects, or etc., 10,000 crores are required. Accordingly, I have to collect 10,000 crores only from the public. And accordingly, I have to design out of 10,000, how much direct taxes, how much indirect taxes. That is the design principle. That is the design principle. Next.
Okay. Yeah, next is, sir, what are the pros and cons of different taxation systems?
Pros and cons of?
Different taxation systems.
No. Madam, here particularly the direct and indirect taxes. Indirect taxes, it is nothing but a consumption tax. Direct tax is on income tax only. For each tax, pros and cons are there. That is, advantages and disadvantages are there. But what are the advantages? Particularly, it is a source of income to the government, source of revenue to the government. We should not talk income. It is a revenue to the government. Why revenue? For development activities, some funds are required by the government. But what is a disadvantage? It is a burden to the individuals. And once it is a burden, then people are avoid to pay the tax. And people are aware, some people, if more tax is there, then automatically it discourages to work. Suppose morning 8 o'clock to 8 o'clock 9, and night 8 o'clock, if I work in any company, out of 100 rupees of my wages, if a government is taken 50 rupees tax, then I am not interested to work. And it creates, if the government takes only 10%, then I am interested to work. The productivity will also increases. So here, for every tax system, the advantages and the disadvantages are there. That's why the good tax system should have the fairness, adequacy, simplicity, transparency, and easy administration is required. Then only it is a good tax system. Otherwise, some tax systems advantages are there, some tax systems disadvantages are there. These are to be readjusted by the government from time to time.
Sir, next question is, if infrastructure plays an important role for economic growth, so why infra inputs used for construction is taxed more relatively?
Correct. Today, housing sector is there. Whatever the interest they are getting exemption, Whatever the installment they are paying, income tax exemption is also there. Why housing sector is a lot of importance given by the government, particularly the real estate sector, because the derived demand is there. Once the housing sector given the concessions, then the steel industry will increase. The demand for steel industry, the cement industry will increase. The paints, the electronic items like fans, all the gadgets, electronic gadgets, demand will increase. Beyond all these things, the labor employment opportunities. That's why it is a biggest sector. The government is also giving more focus on real estate sector because a lot of advantages are there. Derived demand to other industries, thereby economic growth will happen. That's why concessions are there. If at all you are taken a housing loan, some the interest concession is there, installment concession is also there. Next one, madam.
Which is the biggest tax-paying sector in India? Which is the biggest tax-paying sector in India?
Madam, please repeat that question, madam.
Yeah. Which is the biggest tax-paying sector in India?
Which is the biggest tax payer? Corporate tax only.
Okay. Next is, sir, you can you explain extensive consumption relationship with inflation?
Inflation with the tax, madam?
No. Can you explain extensive consumption relationship with inflation?
Consumption relationship with
Yes, sir.
okay. Suppose I take for example, government reduces the tax drastically. Instead of 50%, only 5%. 95% disposable income. Once your disposable income is increasing 95, then your consumption will increase. Consumption accelerates the inflation. Why? Because once more consumption is there, the lavish expenditure, the value of the money will decrease and the quantum of the amount you are going to pay. So the consumption and inflation, if the tax is more, then automatically your disposable income reduces, the value of the money will increase, and you are using your money for essential products only. The price stability will be there. So the consumption inflation, once the tax are low, consumption will increase, inflation will also increase. Once the tax are high, the consumption will decrease, value of the money will increase, and inflation will also control.
And so the last question is, what level of public spending is desirable for a developing country at a given level of national income?
It depends upon the priorities of the government, madam. Suppose that today, next year, there is no priority to the government already achieved. Example, this is a it may not happen, but next year there is no development and no development. The government should decrease the taxes. There is no benchmarks. This is the percentage in national income. This is the percentage in gross domestic product. It depends upon the priorities. It depends upon the development activities of the country. Once the development activities of the country is more and the funds are required more taxes, thereby the percentage of GDP will increase. If already developed, no further development is required, less tax and less percentage in GDP or national income. There is no specific benchmark. This much percentage for national income, this much percentage for that GDP. There is no benchmarks laid down across the world.
Thank you very much, sir, for the wonderful presentation and addressing the queries of the participants. Thank you all the participants for joining the webinar. Thank you, sir.
Thank you, madam. Thank you very much for giving an opportunity by the committee. And thank you to all for patiently listening for the last 2 hours. Thank you.
Thank